So hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor, and today we are going to talk about, yes, one of our favorite stocks, Tesla. Why Tesla has dropped a bombshell on us investors with its earnings. Well, before we jump into the financials, and I would just like to keep this video really short, because that's the main focus for the Wall Street and also for us investors, which is making Tesla now trading at $227 at the time of recording this video. So it's down by 6% in the pre-market. And this brings me to a comment on one of my previous videos from Tesla, where a guy mentioned that no matter what you say, I mean by you he means me, Tesla is ultimately an automaker. Yeah, and I get his point. He is not lying. Yeah, they are an automaker, and majority of their revenue for now, and this is where I actually agree to disagree. We are talking about the stock market, and in case of stock market, it's all about the future, right? So people are paying a high premium on Tesla with a P ratio of 50, 60, or even 70 or higher, because they do assume or predict. It's all about assumptions about stock market, right? That's how we do the discounted cash flow analysis as well. So valuation or growth, all about prediction and assumptions. So the investors are paying such a premium only for Tesla, and compared to Nvidia, I'm not even going there. Nvidia is trading at 200, above 200 P ratio. But anyways, compared to that, Tesla seems to be cheaper, first of all. But people are paying this premium, which is of course higher than the industry average of 25 to 30, because we all think that Tesla is gonna dominate not just the auto industry, but the FSD and SaaS as well, and SaaS related to FSD and the AI capabilities. So we can also see that Tesla is using its cash flow in the right direction now into the AI, and this is what actually should make you think why Tesla is using its cash in the AI segment. So think about that. Other than that, I think Tesla is one of those companies where you can literally predict what's going to happen in the next quarter. And this is what I really like about a company. This was already mentioned by Tesla, by Elon Musk, in the previous earnings calls as well, that they are going to cut the prices. And we all know that this will affect the margins. You see, this is what is really good about this company, that you can really adjust your investments and you really know that what is going to happen. And this is what I really like about this company. It's so easy to predict about the margins, and this company is so transparent. So let's cover the main points quickly, because this is actually in the focus. So Tesla on Wednesday reported adjusted earnings per share of 66 cents and automotive gross profit margins, including regulatory credit sales, of 16.3%. Again, they really focused on the automotive gross profit, because this is what we all are focusing now for the present and the short-term future. But this is going to change, trust me. And Wall Street was looking for profit of 70 cents, so there we lagged, and margins of about 17.5%. Operating profit margins came at just 7.6%, down almost 10 percentage points over the year. And this is what actually I think the investors didn't take nicely, because we never thought that the operating profit margin would come below 10%. And these were my predictions as well, but eventually it has happened. So I accept that. I also assumed that Tesla's operating profit margins won't come below 10%. So there I was wrong, and I accepting that openly. But it doesn't change my analysis and my theory for Tesla, because like I said, and I have mentioned this many times in my previous videos, the purpose of these price cuts are also to make Tesla as the biggest auto manufacturer and put as many as cars on the roads to collect as much as data and to create that data set for their AI engine to learn through this data set. So Elon Musk further says price cuts were responsible for the decline in profitability, which we all know. The economy is simply making it harder to sell cars, something Musk mentioned several times on the earnings conference call. And he's worried about the high interest rates environment. And the thing is that because vast majority of the people who are buying a car are buying through monthly payments. So of course the interest rates matter the most, because then you have to take a loan. And I understand this point. I mean, this is not just Tesla who is affected by this, but yeah, I agree that price cuts are affecting Tesla's profitability. But again, guys, you have to see that their sales are also increasing. So you can see there are a lot of target price cuts from $260 to $50, and Citigroup also did a price target cut from $271 to $255. Yeah, so we can see all this is happening, and that's why it is taking a hit on the stock price. But also there's one more important factor here, is that in 2024 the next generation product might be delayed. But we all know that Elon Musk does that. Yeah, this happens with Tesla. It's not a new thing that there are delays and this and that. But in this case, I wouldn't really blame Elon Musk. I'm not being biased with Tesla. What is wrong. Yeah, but here I would say that the macroeconomic situation might take a hit there, and that's why the stock price, like many YouTubers are predicting, that the stock price will get up to $300, $350, $400 by the end of the year, or by first quarter of 2024. I personally don't think that. Yes, quarter 4 is one of the strongest quarters for Tesla, so that might play a good role in the price of the stock. But then there is also tax harvesting, and people might sell. So yeah, this is not a Tesla stock price prediction video. For that, if you guys would like to know what's my prediction, then please leave a comment in the comment section, and then I will try to make a video on that. But for now, I will keep this video up to the earnings presentation. And then coming on to one of the bullish points, which is Tesla will eventually be a supplier of power electronics, batteries, chargings, and driver assistance software. And this is what I am also focused on. So like I said, for now the investors are just focused on the car business, which I mentioned earlier in this video, and so does the writer of this article also is assuming. And that's true. I mean, this comment on my previous video, like I said, says the same. Yeah, this guy had a point that until now it's just a car manufacturer and we should focus on the car business. But this is not the only factor why I'm investing into Tesla. Yeah, Tesla is going to be a really big manufacturer for the EV. 20 million cars until 2030. I mean, it's not a joke. So for sure, it's going to be huge. And apart from that, the biggest driver will be this. Yeah. And Tesla will eventually have software part of the business, which will create amazing margins, because software is one thing, guys, which you have to understand, that it's developed one time, the resources are used one time, and then it's sold millions of times. Yeah. But a hardware, you have to make it every time. Every car has to be produced, but software has to be produced only once, sold again and again. That's why the margins on the software business or SaaS model are higher. Yeah, and if you take the average, Tesla will have amazing margins. So these price cuts are temporary, just to increase the sales of the cars and to increase the number of cars on the road. That's the aim, and that's what matters for us. So that's it, guys. I wanted to give you a Tesla stock update video. So this was just a short Tesla stock analysis video, and I hope you guys liked this video. If you did, then don't hesitate to hit that like button, subscribe to the channel, please. And if you would like to know my positions and what I'm buying and selling personally, then don't hesitate to join our Patreon's community, where we discuss all these things on a regular basis. And I will see you on the next video. Until then, stay safe, stay healthy, and ciao.